The Central Bank of Nigeria, CBN, after its second Monetary Policy Committee meeting for the year on Tuesday, further tightened the interest rate and increased the monetary policy rate MPR by 200 basis points to 24.75% from 22.75%. It also adjusted asymmetric corridor around the MPR to plus 100 minus 300 basis points. The MPC retained the cash reserve ratio CRR of the money deposit banks at 45% and increased that of the merchant banks from 10% to 14%, while it retained liquidity ratio at 30%.
The committee's decisions are as follows. 1. Raise the MPR by 200 basis points to 24.75 from 22.75%. 2. Adjust the asymmetric corridor around the MPR at plus 100 to 300 basis points to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. 4. Adjust the cash reserve ratio of merchant banks from 10% to 14%. And 5. Retain the liquidity ratio at 30%.
The Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture and the Nigerian Association of Small-Scale Industrialists have explained that the hike in Nigeria's monetary policy rate, also known as interest rate, from 22.75% to 24.75% by the Central Bank of Nigeria will further accelerate the country's inflation and lead to massive job cuts across the country. While they described the interest rate hike as a move that would come with unintended negative consequences, the Lagos Chamber of Commerce and Industry said the MPR hike was a price that businesses would have to pay given the current state of the economy. The CBN again increased the MPR to 24.75% from 22.75% despite concerns about economic hardship. The CBN Governor Yemi Cardoso announced this after the second Monetary Policy Committee meeting for the year in Abuja on Tuesday. He said the new rate was focused on reducing current inflationary pressures and ensuring sustained exchange rate stability. We're still with the Central Bank of Nigeria, where the Governor Yemi Cardoso revealed that security agencies, including the Economic and Financial Crimes Commission (EFCC), are currently investigating questionable foreign exchange allocations and forward contracts previously estimated at $2.4 billion. The development followed the conclusion of the audit of $7 billion debts inherited by the Cardoso-led CBN from the previous administration of the Apex Bank. The new administration of the Apex Bank had engaged a global firm, Deloitte, to carry out an audit of the $7 billion debts. Cardoso had earlier said about $2.4 billion FX allocations from the $7 billion backlogs were invalid. Elaborating further on the issue while speaking with journalists shortly after the 294th meeting of the Monetary Policy Committee in Abuja on Tuesday, the CBN governor disclosed that security agencies were investigating the FX transactions that had been declared invalid by the audit report. The Apex Bank, according to him, is providing the necessary documents to help the investigation. Away from the Central Bank of Nigeria now, the National Assembly has expressed its willingness to collaborate with the World Trade Organization (WTO) in digital and marine economy. The Senate President and Chairman, National Assembly, Senator Godswill Akpabio, gave this indication while addressing the WTO media shortly after a visit to its Director General, Dr. Ngozi Okonjo-Iweala, in her office in Geneva, Switzerland. Akpabio is in Geneva as head of Nigeria's delegation to the ongoing 148th Assembly of the Interparliamentary Union (IPU). Meanwhile, Deputy Speaker, House of Representatives Benjamin Kalu, and Chairman, Senate Committee on Local Content, Senator Natasha Akpoti-Uduaghan, have sought the collaboration of WTO to boost the exports of the country's primary products and leverage the opportunities provided by the African Growth and Opportunity Act, AGOA, and Center for the Promotion of Imports from Developing Countries, CBI. Akpabio told the media that the delegation was at the WTO on a courtesy call and to look for areas of collaboration with the organization in the various sectors of the economy for the overall benefits of Nigerians.